everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, there are a few things to keep in mind. As always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard within the order window of the web trader and our app. It calculates exposure, potential profit before you ever place your trade. So we'll go through if we have some trade examples and show how that works for risk management. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the web trader platform, which allows you to trade on both the MT4 and MT5 accounts from the same location, and also with the advanced functionalities like some of the tools that we'll use within this session. And so if we log in here in the upper right-hand corner, we'll be in the web trader platform. And as we get started, obviously our focus is fundamental analysis, and then we'll take a look maybe at the technicals for some specific entry points and exit points once you determine the directionality you might prefer for a particular instrument based off of the fundamental side of things. Now, leading into today, there's been quite a bit of optimism on the markets because of various trade deals that have been announced between the US and different trading partners, whether that's been in the past weeks China, some things have been worked out on the positive side of things. Also the UK announced a framework a while back, and more recently some other countries, Vietnam, Japan was a big one yesterday that was announced, and on it goes with trade deals that seem to be working for both sides, and maybe more of a fair setup for the US in terms of how the US views things. And so all of those deals are lending more and more optimism to the markets, it seems, as they're announced. The volatility index tends to work itself down, and the equities, the major indices, seem to be bullish in response to those positive trade deal announcements. Now, there are a couple large economic announcements yet to come today, and we'll take a look at the economic calendar. But I guess the feeling right now is positive sentiment on the markets. I know the futures started in the red a bit today for a lot of the equities, but at my last look, the Dow Jones, the NASDAQ, the US 500 were trending up and maybe even into the green on the day with regards to the US market, and other markets seem to be a bit bullish as well in that regard. So if we want to jump and take a look specifically at announcements that are coming on the economic calendar, we go to the discovery section and bring up the economic calendar. Now, you've probably seen economic calendars before. If you're new to the webinars where I cover our economic calendar, what you'll find is there are advanced tools and functionalities in the economic calendar that we're seeing here that you don't find in the average economic calendar. So usually what you see on an economic calendar are the previous announcement numbers, the forecast for the current announcement, and then the actual numbers as they come in. It's pretty standard for an economic calendar. But these tools over here are what make the economic calendar a bit more special, and we'll make use of some of that functionality right now. Hello, Chris. Welcome to the session from Perth. We've got people from all around the world, so it's nice to see where you're joining us from. Okay, so what I want to show you is on a couple announcements. And by the way, you can get a feel for what's happening by looking at announcements that already came in. If we click on the past announcements, what we'll see is that there's a mix of a little bit better than expected and a little bit worse than expected for the European Union, the UK. There's been some mixed data that's come in so far today. But really, I want to look forward at the upcoming announcements and get a feel for how could you act on these announcements as the numbers come in if you're available to trade at these scheduled times. Okay, and the times should be in your time zone as you look at the scheduled times. And you can pick over here on this side of the screen, you can pick the date that you want to look at. Right now, obviously, we have today's date chosen, and then you can pick, do you want to look at just high-level announcements or high and medium or high, medium, and low? The higher level announcements tend to move the markets more, and so that's typically our focus in these sessions. So upcoming, we have an interest rate decision in the European Union, and the expectation is after some lowering of rates in the past announcements recently, the expectation is the rate will be held the same. Okay, 2.15%. We'll see when the numbers come in. One thing I'll point out as we use the volatility tool over here to analyze the past data is that however it's predicted to come in, if we look at all of the past events, none of them came in above forecast, none of them came in below forecast. So in fact, whatever the predicted rate is, in this case to stay the same, in the database that this looks back over the past year, they've all come in at the expected rate. Okay, it doesn't mean this time it might not break that pattern, but we're looking at the odds here, and the odds are this may come in as expected and match the forecast. And if it does, what we see is the majority of the time when the rate decision comes in as expected, the euro in the hours, and I'm looking at the euro USD pairing. We can look at any pairing with the euro. We'll leave it on euro USD for now. You can look at different time frames after these past announcements to see how has the euro USD moved as the announcements came in. And right now we're looking at 4 hours after the event. So all of these events matched the predicted rate, and all of them we're looking 4 hours after the event for now. And what we see is 71% of the time, the euro strengthened against the USD when the rate decision matched the forecast. Okay, that's a pretty strong statistical advantage. 71% of the time, if you'd have bought, you could have been profitable on the euro USD. Okay, and you might say, yeah, but that's after the rate decision came in. Maybe before you can get your trade off, it already spiked 50 pips. Because we see after 4 hours, the average range movement's 54.5 pips. So what happens in the first 5 minutes? We can look. On average, okay, in the first 5 minutes, we get 12 pips of movement, not 55. So you have time most of the time. You see once it spiked over 30 pips in the first 5 minutes. Okay, so maybe this one, if that happened before you could get your trade off, you sit that one out. But we see most of these either went down or went up very little. We're talking 2-3 pips or less climb. And after 4 hours, the majority of them were up in the 20, 30, 40 pip range. Okay, so if the announcement comes in and matches the forecast, the past data shows if you can get a good entry point, and it doesn't take 5 minutes to place a trade. Okay, this is where it was 5 minutes after. You might even have been able to catch this one, because it realistically, if you've got your trade set up ready to go, euro USD buy in this case based on the data, and if the interest rate comes in as expected, then perhaps you're inclined to buy. It only takes a few seconds to click buy. Okay, and so this is after 5 minutes. The movements have barely moved, most of them. And then after 4 hours, you're in profit on most all of these in the past if you were buying. Okay, so very powerful information. This is what you might call data-driven trading. You're working more like a robot. You're using the past data from a particular announcement, in this case, the rate decision, to determine if it comes in like it did before, what kind of movement could we expect? And this is pretty predictable what happens. There's only once that it really went down significantly. 1 out of 7 events. And this one barely moved down. Perhaps you could have caught it up even. If you look what happened after 1 hour, what happened after 30 minutes, pretty consistent over the time frame that 5 of these 7 were up consistently and got further and further up as it went towards 4 hours. Okay, so you can break down your trading plan based on those time segments and how far did it move in the direction that ultimately you might expect it to move. Okay, any questions, comments on that idea, that concept? I'll pause for just a moment. Okay, if I see any questions pop up, I'll address them, and I'm happy to go back over any point that someone might have missed. So that's at my 3:15 p.m. Okay, so that's in a couple hours, about 2 hours from now, a little over. Then 15 minutes after that, there's another announcement, U.S. initial jobless claims. Okay, does this also lend predictability? Okay, Euro USD, I could use a different pairing. And by the way, since there's a US announcement right after this one, maybe it's smarter to trade instead of on Euro USD. Maybe you're trading Euro GBP or Euro JPY because the US announcement might mess up this movement on Euro USD. Okay, so you might factor out the US dollar since there's a US announcement right after and look at the Euro GBP. It's similar statistics, but not exactly the same. So you can look for the currency pairing that you think might be best, Euro JPY, for example. Look at that, 86% of the time. If this came in as expected, matching the forecast, the Euro, we're talking over 102 pips. So in this case, rather than using Euro USD, when the rate decision comes in, if it matches the forecast, I might be inclined to buy on Euro JPY. Because look what happened 6 out of 7 times in the past. We're talking huge climb on Euro JPY each time if the rate decision matches the forecast. The yen is a safe haven currency, so it looks like fear is dropped when the rate decision comes in, with the yen weakening significantly against the euro. Okay, and you can look in the first 5 minutes, how has it moved? Look at that. Only 23 pip average range movement. 3 of them were down, 3 of them were flat, only 1 moved even 41 pips. The rest were almost no movement at all in the first 5 minutes, and after 4 hours, look what happened. Looks like you could have an easy winner on the Euro JPY, even easier than on the Euro USD, the majority of the time in the past anyways. So then if the initial jobless claims come in different than expected, you don't have the euro paired against the USD, because with the US announcement, the strength of the US dollar could fluctuate and mess that movement up on a Euro USD pairing. So Euro JPY here probably makes sense. And then 15 minutes later, you could trade on USD JPY perhaps. So if we take a look then at the US announcement that comes in 15 minutes later, if we want to pair this with, say, USD JPY, we can say if this comes in worse than expected, which is higher in this case, jobless claims, it's people losing jobs. So new people losing jobs, if this is higher, initial jobless claims, that's deemed bad news. So if it comes in above forecast, it looks like 50-50 movement. It's not predictable. So that tells me I don't want to trade on this if it comes in above forecast on the USD JPY. If it's below forecast, all of a sudden it looks like predictability, meaning if the news comes in better than expected, below forecast, lower jobless claims than expected, it makes sense the USD would strengthen. That's good news economically. So for the USD to strengthen, it also makes sense that the yen, being a safe haven currency, might weaken because there's less fear when there's good economic news. When there's less jobless claims, that might be a reason for something like a safe haven currency like yen to weaken. So this pairing seems to make sense. And the result, if this comes in with better than expected news that is below forecast, the majority out of the times in the past that happened, you have significant movement up, more so than down. Okay, average range movement 75 pips after 4 hours. And you can say in the first 5 minutes, Okay, it's still the majority are up, but most of them have not gone up more than, say, 10, 12 pips or less, even down. So you can get in the first minute or so and catch a very low movement, and then after 4 hours, they're either up a little or up a lot, and only a couple of them went the wrong way. Okay, so it looks like there's a good deal of predictability based on how these come in, and some of them you see that if it comes in one way, it doesn't seem predictable and I wouldn't trade, but if it comes in the other way, then it looks very predictable and I would maybe place a trade. And so you can have a plan for the rate decision if it comes in as expected, that maybe you think the Euro JPY is a good buy, perhaps, based on the past data. And with the jobless claims, if they come in better than expected, meaning lower than expected, then perhaps the USD JPY looks like a good buy based on the past data. And if it comes in the other way, then it was 50-50, so maybe you leave it alone. Now, you're not going to win every time you do this, right? It's not guaranteed the profit. But what you're hoping is if you try each of these announcements for initial jobless claims, for rate decisions, these are repetitive announcements. They come in either each week or each month. You try these, say 10 times each. If you're winning, I don't know, 7 out of 10 times, 6 times you win, 4 times you lose, and overall you're profitable on the strategy of trading on particular announcements, then now that can become part of your bag of long-term strategies that you utilize to diversify how you trade. And so this is just one way to trade, is off economic announcements. And maybe you find 4 or 5 announcements that you have the best success with each week, each month, and you stick with those. Okay. Kareem, you're suggesting maybe using sell limits or buy limit orders when the volatility spikes. These are different trading strategies. Sometimes you want to be careful with trying to catch spikes that go up and thinking they're going to pull back, because sometimes they can keep carrying. Also, during times of large announcements, if you're trying to use pending orders and it's a rapid spike in the market, there can be slippage on your entry point with those pending orders. So I understand your sentiment that a lot of times after announcements, it spikes one way, it comes back the other way, and you can try and time those movements. But I would be careful with that type of trading around large announcements because you can end up with maybe not getting the entry point that your pending order that you were hoping to get. Okay. All right. So if there are any questions on what we covered here, I'll keep an eye out for them. But in general, you can look at any of these announcements for the upcoming week each week. Okay, you can look through Monday, Tuesday, Wednesday, Thursday, Friday while you're relaxing on the weekend, and have a plan for the upcoming week of which announcements look the most predictable to be able to trade on using this strategy that we covered. And maybe you find 5 or 6 or 8 trades that you might potentially place on announcements each week. Okay, and so that's one strategy that you can do, and then you can move on to something else. And I can show you another tool here for fundamental news. So, you know, the fundamental news on the economic calendar, we know exactly what it will be, when it will be, etc. Other types of news you might find in the market buzz are headlines. You don't know what the next headline might be or when it might come, but you can check the market buzz feature to find what are the most recent headlines. And it has something come out in the last 5 minutes that might be important that I wouldn't otherwise know about. So we can take a look. It's earnings season. Google, Tesla, they had earnings numbers that they reported yesterday, so maybe we look at those. Google, I saw exceeded expectations on both revenue and earnings per share. So it makes sense that the price may rise 7.7%, they say. Okay, so the technical signal is here. If you want to look at the technical analysis, I think it's a good idea not to only look at fundamental analysis. So you can look, what's the technical signal? What do the analysts at Trading Central think? They think it's an uptrend and that it will continue to carry up towards this price range up here, which is the next resistance level on the chart. Okay, so their prediction is a pretty significant rise for Google. for Alphabet. And so the technical breakdown is here of what they're seeing. Now, you can try and match that up then with the fundamental news as well. And so if I'm trying to say, maybe I'll trade on this signal, maybe I'll trust it, but only if the fundamental news supports it. Okay. First of all, we know the trade deals that are occurring are creating momentum for the tech sector. It's opening up markets again, getting rid of the tit for tat tariff raises, and now agreeing on deals with Japan, with the UK, etc., so that trade has opened up for these companies. And the tech sector has been responding to those trade deals in a very strong way, okay, up to this point. So we already know from what we talked about before we started looking at the economic calendar that there's positive sentiment because of those trade deals right now. Don't forget the US also passed a huge tax reduction for businesses and huge incentives for companies to grow in the US. So there's that positive aspect of things as well. Now, so we start to go beyond those larger storylines, and now we can look at specific headlines, fundamentally speaking, and say, is there more to support the idea that this might rise 7.7%? And so you see here, Google's AI momentum powers its parent company. Profit jumps 19%, revenue tops 96 billion. Well, that sounds good. So if you weren't aware that the earnings were yesterday, well, just click the link. You can read the summary, or you can read the whole article, and you can understand what happened with Google and why there's so much momentum maybe for the stock price decline. Okay, and you read the article and you make up your mind for yourself. Does that news help convince you maybe to follow this signal? Okay, and a lot of times I have clients say, well, your signals, I lose as much as I win if I follow your signals. And I ask, well, did you qualify which signals you were going to follow by looking at the most recent news first? Because if I'm looking at the news and this was all negative, saying that they missed on their earnings, that the revenue was less than expected, if that was the case, then I'd say, you know what, I'm not going to believe this technical signal because the fundamental news is working against that signal, then I wouldn't follow it. Okay, and perhaps by trying to align the fundamental news, in this case, it's good fundamental news that kind of supports the idea of this signal. If you qualify which signals you'll follow and only follow those that you think the fundamental news supports, then maybe you'll find that you have better success rate with those signals. The benefit of the signal is that it's giving you the price levels where you can see the next resistance level and get an idea of where you might get out, if indeed you think it's a correct decision to buy. So use the signal for the technical breakdown of where the support and resistance levels are and where you might get in and out, but use the fundamental news ultimately to determine if you think the direction that they're predicting is correct or not. Okay, and I think that could improve your win percentage with using the signals that you find in our platform and our app. Kareem, you're asking if you need 50% win rates or higher than that in order to trade successfully. Actually not. You can set up your trade that your take profit distance is double the distance sometimes of your stop loss. And in that case, you could win 40% of the time and still profit. So it depends how you set up your risk management. And we'll go maybe through a trade example to show that idea. It depends how you set up your risk management as to whether you need to win more than 50% the profit. A lot of times you don't. You can win 30% of the time, 40% of the time, and have the rest of your trades lose it by hitting stop losses, and you still can be profitable because your take profit distance could be quite a bit further away than your stop loss in some scenarios. Okay, good question though. All right, so I see a positive headline here then to go with this technical signal that says they think Google Alphabet Incorporated will rise. Okay, and you can scroll down and find more articles to see, are there other things that you think will help support your decision here? Okay, Google just spent $14 billion on servers. This is 2 hours ago that this came out. It's new information. Google just spent $14 billion on servers in 91 days, plans even higher spending soon. They're obviously doing well. They're investing and trying to grow. They're investing on more servers in the realm of $14 billion in 91 days. So sounds like they have some big plans ahead. Google's advertising revenue grows as AI reshapes search results. So their advertising revenue, meaning they make money by people paying them to advertise on Google, to advertise their products. So Google's search engine is bringing in a ton of advertising revenue. It's growing as AI is reshaping search results. So AI is helping them be more profitable, is basically what that headline is saying. Again, it sounds like positive news. Everything here is they're growing, they're investing more money, their revenue is growing for advertising. And then the first article we looked at, they made more money than expected per share, and revenue topping 96 billion, etc. So I'm convinced, maybe after the article search, and maybe you take the time to read each of those articles to convince yourself that maybe I trust this signal. So now I wait for the US market to open, and if I like the entry price, then maybe I make my buy trade in this example. Okay. Now, you can look at any instrument in this with this tool, with the market buzz. You can switch to currencies, commodities, indices, etc. Why is Tesla trending so much? It's interesting. We can take a look at Tesla. In fact, their earnings came in and exceeded expectations as well. And you see the predicted price here is 16.5% rise, even more so than Google predicted price rise. But as I read the articles, yes, their revenue and earnings per share were better than expected yesterday, but I also see other articles. Tesla's results plummeted again, and rough quarters are coming, says Musk. Okay, so the expectations were low. That's why they exceeded the expectations. So sometimes you have to read into the numbers a little bit. And this is Musk, the owner of Tesla, saying this. Tesla's results plummeted again, and rough quarters are coming. Boy, that doesn't sound like good news. And if you read that article, maybe it convinces you that maybe you don't expect this signal to carry out. Okay, so here's another one. Tesla shares fall amid delays, distractions, and fading electric vehicle dominance. Another negative headline, another negative article. Elon Musk, Tesla loses market share in Europe for 6th straight month. Another bad article. Or I shouldn't say bad article, but article giving bad news about Tesla. So you can start to read on what's going on here. Tesla's reputation tanks. Survey ranks it least trusted car brand in the US. That's bad news. The US market, Tesla's the least trusted car brand now, according to this article, the survey. So as I read these articles, this is an example where the fundamental news that's come out in the past several hours kind of tells me that's not my first choice to follow this technical signal. I might actually look to see if it reaches a resistance level, if that's an opportunity to short it based on those articles, okay? And maybe I would lean more towards the Google opportunity if I like the price point when the market opens, okay? So two different examples here where the fundamental news supports the technical signal with Google, but a lot of the recent fundamental news about Tesla does not support the technical signal. And then you can make up your mind for yourself. Which signals do you trust and which ones don't you? Okay. Now, we can take a look at a trade example. If I'm looking at something like the NASDAQ. Why the NASDAQ? Because, wow, Google had good numbers. And if you look at a list of the earnings data that came out yesterday, you'll see that the top 10 by market cap all exceeded earnings and revenue expectations. And a number of those companies, IBM, Google, Tesla, are in the US Tech 100. Okay, so there's some fundamental reason why you might be looking for an opportunity on the US Tech 100. because there might be a bit of predictability. I see a pullback coming off this resistance level. We were looking at this yesterday, and we see the resistance level that was drawn. And as expected, it had a little bit of hesitation at this resistance level from the past and has pulled back some. So, maybe you think it'll pull back a bit further, but perhaps you think the overall momentum should be upward still, based on the fundamental news. And we can look for a general trend, technically speaking, meaning I can not only look at the US Tech 100, but I can look at the US 30, I can look at the US 500 and see how are those trending. There's a lot of overlap with these indices, okay? Most of the US Tech 100 companies are also in the US 500, like 70 something of the US Tech 100 companies are in the top 500 companies, so they're in the US 500, and there's some overlap with the industrials as well. A number of those companies are in the US 500 as well. Okay, so if we're looking at the trend of what's happening with each of these, let's make sure we're on the same candles, 1 hour candles, 1 hour candles, and 1 hour candles. So what we see is a bit of a climb and then a pullback occurring on each of these, a climb and a pullback, a climb and a pullback, and a climb and a pullback. So there's nothing specific about just the NASDAQ or just the Dow Jones. In general, the US market seems to have run out of a bit of momentum, and we're seeing a pullback right now on the indices. So it's kind of a broader picture. And then if we want to go back to a single chart view, the US Tech 100, then we can start to analyze it a little bit closer as well. So we can take a look and try to see, well, if I look at 1 day candles, what's happening in the view. And what we see is all-time high after all-time high. It just keeps reaching new all-time highs lately. And now here we sit near the all-time high again. And so we can kind of analyze, well, what's the circumstance right now? We've got a large announcement coming in the US, okay, a couple of them today. And so we know the economic calendar has some numbers coming out. And so that could be the reason why the market is kind of pausing and pulling back a bit, waiting to see what will these numbers show, okay? And so, if they show better than expected news and, the initial jobless claims are lower than expected, maybe that creates more optimism on the markets and can continue the rally. Or if the numbers are the opposite, they come in worse than expected, maybe that continues with a little bit of a pullback. Okay, so I think fundamentally we understand why the rise occurred. We can also understand why, for the time being, there's a bit of a pullback. So in the short term, if you're doing short-term scalping between now and 2 hours from now, or a little less than that, when those numbers come out in the US, perhaps it's a time to try and short the US Tech 100, because when there's indecision, when you don't know for sure what's to come, sometimes that's when a little bit of fear sets in. And since we don't know for sure what those initial jobless claims will be for another couple hours, perhaps now's the time that this will pull back. Now, my caution on that is you're working against the greater momentum. Fundamentally, we're looking at a situation where there's a lot of reason for the markets to keep climbing. The tax cut package went through in the US, trade deal after trade deal keeps being signed, big investments coming into the US for the tech and energy sector. It seems like there are a lot of positive things. And so to bet on a large pullback right now seems to be working against the larger fundamental picture. Okay, but it doesn't mean that you can't catch a pullback off of a resistance level. It happens a lot, okay, in the short term anyways. My view would be to try and take a look at this and see, first of all, is there a signal on the US 100? So the US Tech 100, there is a signal. What's the technical signal? It's to buy. Okay, so the professionals at Trading Central think, from a technical perspective, that it's set up for this to climb further. okay? And then you have to think to yourself, fundamentally, does that fit the picture as well? There was a lot of positive numbers that came out yesterday with the earnings. There is reason for excitement and for the equities maybe to be able to push up further from a fundamental sense. So then the third part of that scenario is the timing right now? And it feels like the timing maybe is off because this is near the resistance and looks like in the short term wants to pull back down a little. So this is where you might say, let me take a look at my technical setup, and perhaps if this pulls back to a recent support level, that's a spot that I might be interested. So now I've gone to smaller candles, 15-minute candles, for example, and I can start drawing lines and saying, fundamentally, I want to buy, but technically it seems not in a good spot. So here's the first support level that I might think to buy from. The signal here says as long as it stays above 23,280, that's the support level they've drawn in the signal, then they say it's still a buy signal. So this is where the technicals can help you out, even if fundamentally you know you want to buy. You can look and say, it looks like this could come down and find this support level here and still be a buy signal. So 23,280. Let me draw another line. 23,280 is right here. That's this old resistance level. See, it was resistance, resistance. It was having trouble breaking, resistance, kept hitting and dropping. Then once it went above, it became support and went up further. So you understand from the technical analysis why this is the pivot point, that if it breaks below there, then they say it's probably going to keep dropping, because that's a significant price level from the past that it was stuck below there until it got above and it became support. So if it breaks below there, then something bad must have happened fundamentally to cause that to break back below this price. And that's why they say if it goes below there, then look for further downside. As long as it's above this price, they're saying buy. Okay, that's the signal. So if you're looking at this and saying there's some big numbers coming out of the US in about an hour and a half now, it looks like this is trying to pull down at least temporarily, but it is a buy signal, and maybe you're bullish, but maybe not at this price. So this is where you look at the technicals and you could say, okay, I could put a pending order that if it gets near 23,348, this first support level, that I'll buy from there. And then I could put my stop loss below this next support level. As long as it doesn't break below this price, which is the pivot level, I'll stay with it. But if it breaks below that price, then I'll get out, because the signal says if it breaks below that price, it'll probably drop further. So I put my stop loss below that pivot line. This is the pivot line from the signal, and I have my stop loss here. But maybe I don't like the current price and I want to buy from closer to this support level here. Now it's gotten pretty close actually to that price. So if you're comfortable that it's close enough to this support level now, then maybe you do a market move. Okay, you could do a pending order, you could do a market move, depending if you like the current price or not. If you want to do a pending order, you say execute when price hits. And you could say only if it gets to 23,350, which is right about here where I'm pointing. Okay, if you're okay with this price, then you'd get in now. Okay, it's up to you. Now, you can look at the smaller candles and see, is it uptrending yet or not? It doesn't look like an uptrend yet. This is a pretty strong downtrend on the 5-minute candles, and it looks like maybe it might try and test this support level. In which case I might say, okay, if it does get down to 23,350, or say 55, okay, 23,355, that's here. If it hits this price here, then I'll buy, with my stop loss below this support and the pivot line from the signal, which is down a bit further. Okay, so enter here. Where would I get out? Well, up here at the resistance makes sense. It wouldn't have to break into the all-time high, and I could take profit just before that resistance level at, say, 23,413. Okay, so where would I take profit? 23,413. Where would my stop loss be? Let's go back to the larger view. My stop loss is down here below that pivot line, which was down here. Actually down here, this one. Okay, 23,280 was that support level. We were looking at it on 15-minute candles. And so that was this one here, 23,280 was resistance, resistance, resistance. So this is the spot where we get our stop loss below that level, 23,262 is where I drew that line for the stop loss, below the pivot level of that technical signal. So I'm looking to make a profit of 22,320, risking a bit more than that at 3,720. Okay, so in this case, I would be risking a little bit more than the potential profit. You might rethink that and say, you know what? I don't want to risk more than the potential profit. Maybe you do, maybe you don't. So you could adjust and say, I think I'll put my stop loss below just this support level. If it breaks that support, then I'll get out, because then it's likely going down to the next support level rather than risking all the way below both of those. And that is an option you could take. And if you do that, then you say, okay, stop loss below one support level, 23,337. Now I'm risking much less than the potential profit. In this case, I'll only need to be right 1 out of 3 times, and I make an overall profit. Okay, so if this is the setup you like, then 23,337 stop loss is right about there. And now I just need to adjust my trade size. Maybe I don't want to risk 720. Maybe I want to risk 500 per trade or 100, whatever that is for you. So if I want to risk about, say, 1% of my balance, so 577, so I need to have a smaller trade. 0.3, I'm risking 540, which is less than 1% of my balance. Maybe I'm comfortable with that, and that would make me over 1,700 if I was successful. So if I like that setup, then I'm good to go. Okay, so you see how easily I risk managed my trade. I adjusted where I wanted my stop loss in this case. Instead of going below 2 support levels, I decided, you know what, I'll go below 1 support level. I'll treat this more as a scalp type trade, a short distance trade. And if this can bounce back up leading to those announcements to where it was just a little while ago, then I can have an easy win. And if it breaks the support level, I have a small loss, less than 1% on my account. Okay, if I wanted to be more patient, I would have put my stop loss down below the 2nd support level and then taken a much smaller trade to have the same level of risk. I could have done that as well. Okay, because the fundamental news seems to be positive, I'm a little more comfortable being below just the 1 support level, that maybe that'll hold as those announcements approach in the US. Okay, it's just an example of how you have some choices with how you set up your risk management. A short stop loss or a longer stop loss, and no one way is correct. Each one can be correct depending on what your trading style is. Okay, the closer stop loss, you'll get hit more often, but you're risking a lot less. The stop loss further away, you tend to hit it less often, but when it does, you're losing a bit more. Okay, any questions, comments on the setup here or what we covered? Okay, so this is a good place to stop. Thank you all for joining and for the participation with the questions and information that you were sharing. Those announcements are coming soon out of the US. Also, the rate decision and all of that will be affecting the movements on the chart. So good luck if you're placing some trades on those announcements. And I'll be back at it after the weekend into next week. My next session is next Wednesday evening at 5 p.m. UK time. All right, everybody. Thank you for joining. Good luck with your trading. Bye for now.